This is Alan Bush with Archer Financial Services. Seeing a little pressure in the stock index futures overnight. This linked to news that industrial output in China declined to a 3-year low. So some negative numbers there, but not really much of a problem as far as how stock index futures reacted, especially with the jobless claims report coming in better than expected. So that did help stock index futures to recover. Of course, we have the ongoing problems in the Eurozone, that being a negative influence, but we continue to believe that this will be more than offset by prospects of easier credit from the Fed, although we do believe that the Fed will be cutting interest rates in one form or another later rather than sooner. In any event, that belief that there will be easier credit from the Fed will support stock index futures. So we remain bullish in that market. We'll probably see some better prices today, probably higher prices longer term as well. Over in the foreign currencies, seeing the euro currency under some pressure. This market ignoring some bullish news. We had the European Central Bank indicating that they are willing to buy the debt of some of the more financially strapped countries of the Eurozone, and yet the euro currency very much underperforming this positive statement. The fact that we are not performing well on bullish news suggests that the euro currency will continue to decline from current levels today. Longer term, we feel that the euro currency has a long way to drop, with the 120 support likely to be breached over the next month or so. As far as some of the other currencies, the Australian dollar holding up relatively well. We had employment numbers in Australia better than anticipated. Also some support for the Canadian dollar after the Bank of Canada governor indicating that the upward pressure on interest rates remains. Our feeling is that the Bank of Canada will not be raising rates. In fact, if anything, next year there will be pressure on the Bank of Canada to lower rates. So of all of the currencies that we're trading, of the major currencies, we would expect the euro currency to continue to decline, and the euro currency has the most fundamentals lined up in the same direction, suggesting more pressure ahead for the euro currency. Over in the credit markets, supply this week, a negative influence, although we do have the last auction today, the 30-year bond auction. The previous two auctions were not very well received, but with supply out of the way, at least with today's auction being the last of the 3 auctions, I think we can see a rebound in prices. The fundamentals remain bullish longer term, as the flight to quality influence we think will remain in light of the problems in the Eurozone, problems in the Middle East. So this pressure we've seen over the last week or so is likely a buying opportunity. Longer term, we would expect Treasury futures to test contract highs. Now, once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.